Today, we are diving into a sector that's been making headlines and capturing the attention of investors worldwide, the defense sector. From policy changes to remarkable stock gains, let's explore why this sector is crucial and whether it should be on your investment radar. The Indian defense sector is undergoing a transformative phase marked by increasing funding, expanding defense budgets, and rising defense exports. Recently, Defense Minister Rajnath Singh reaffirmed the government's commitment to boosting defense exports to 50,000 crore rupees over the next 5 years. This announcement has significantly boosted investor sentiment. So, why is the defense sector so important? First and foremost, national security is a top priority for any country. A robust defense sector ensures that a nation can protect its sovereignty and maintain peace. Additionally, a strong defense industry supports technological advancements, job creation, and economic growth. India's focus on Atmanirbhar Bharat or self-reliant India underscores the importance of developing a strong domestic defense manufacturing base. This initiative not only reduces dependency on foreign imports but also positions India as a significant player in the global defense market. But what does this mean for investors? The recent surge in defense stocks indicates a positive market sentiment. Companies like Paras Defense and Space Technologies have seen remarkable growth, driven by their expertise in defense and space optics, defense electronics solutions, and heavy engineering. These companies are benefiting from increased government contracts and expanding export opportunities. Analysts are optimistic about the future of the defense sector. Japanese brokerage firm Nomura highlights a lucrative ordering opportunity of $138 billion over FY 24-32, driven by escalating demand for defense equipment, technologies, and services. However, as with any investment, it's essential to be cautious. While the sector shows strong potential, market volatility and geopolitical risks can impact stock performance. Analysts suggest holding on to defense stocks amid this bullish outlook but advise waiting for corrections before making fresh buys. Let us talk about Mazgaon Shipbuilders Limited, MDL. The company is based in Mumbai and established in 1774, is one of India's leading shipyards. Initially a small dry dock, MDL has evolved into a renowned shipbuilding company, constructing over 801 vessels since 1960, including warships, submarines, and offshore platforms. The company primarily serves the defense sector and has built 28 warships and 7 submarines. MDL is involved in several key projects, such as the Nilgiri-class stealth frigates, the P-15B destroyer project, and the Kalvari-class submarines project. The company has also diversified into manufacturing cargo containers and is considering developing a greenfield shipyard at Nhava. MDL's competitive advantage lies in its extensive experience, strategic location, and strong order book. The company's infrastructure allows it to build multiple submarines and warships concurrently, and its focus on indigenization aligns with the Make in India initiative, reducing costs and increasing self-reliance. Let's look at the historical growth rate of MDL. Over the past 3 years, the company has shown impressive growth, times sales CAGR, 3 years 33% times net profit CAGR, 3 years 47% over the past 5 years, times sales CAGR, 5 years 15% times net profit CAGR, 5 years 29%. MDL has demonstrated consistent growth in both sales and profits. The company's sales have increased from 4,048 crores rupees in March 2021 to 9,467 crores rupees in March 2024. Similarly, net profits have grown from 514 crores rupees to 1,937 crores rupees in the same period. This consistent performance highlights the company's strong operational capabilities and demand for its services. Currently, MDL's stock is trading at a P/E ratio of 40.4. To assess whether this is reasonable, we compare it with the historical mean P/E ratio. Historically, MDL's P/E has ranged between 20 to 30, suggesting the current valuation is on the higher side. Investors should consider this in the context of the company's growth prospects and market conditions. Now, let's move on to the technical analysis of MDL's stock. Looking at the chart, times support levels. The key support levels to watch are 1,840 rupees and 2,568 rupees and 88 paise. These levels have historically acted as strong support. Times resistance levels. The primary resistance level is 3,877 rupees and 55 paise. Breaking through these levels could signal further upward momentum. In summary, Mazgaon Shipbuilders Limited is a robust player in the shipbuilding industry with strong financial performance and promising growth prospects. However, the current valuation suggests that the stock might be slightly overvalued compared to historical averages. As always, conduct your own research and consider your risk tolerance before making any investment decisions. Next, we'll dive into both the fundamental and technical aspects of this prominent aerospace company HAL. Let's start with an overview of the company's business. HAL is engaged in the manufacture and maintenance of aircraft and helicopters. It plays a strategic role in India's defense program, being the only Indian company specializing in aircraft manufacturing and providing related maintenance services. HAL's competitive advantage lies in its long-standing expertise, strong relationships with the Ministry of Defense, and its significant role in the defense sector. Over the past 3 and 5 years, HAL has demonstrated robust growth. The company's compounded annual growth rate, CAGR, for sales over the last 3 years is 10% and over the last 5 years, it is 9%. Similarly, the profit CAGR for the last 3 years is 33% and for the last 5 years, it is 26%. This consistent growth highlights HAL's strong market position and effective business strategies. Looking at the consistency of HAL's growth, we see steady increases in both sales and profits. For instance, from FY 2020 to FY 2024, sales grew from 21,445 crores rupees to 30,381 crores rupees, while operating profit increased from 4,880 crores rupees to 9,739 crores rupees. This indicates a healthy and sustainable growth trajectory. Currently, HAL's stock is trading at a price-to-earnings (PE) ratio of 45.8 with an earnings per share (EPS) of 113 rupees and 57 paise. Historically, HAL has traded at a lower PE ratio, suggesting that the current valuation might be higher than its historical average. Investors should consider this while making investment decisions, especially in a high PE environment. Now, let's move to the technical analysis. HAL's stock shows strong support at 3,998 rupees and 54 paise and significant resistance at 9,715 rupees and 99 paise. The recent price of 5,200 rupees and 55 paise indicates that the stock is trading above its support level but has room to move towards the resistance level. The upward trend line suggests a bullish pattern, supported by increasing trading volumes. In conclusion, HAL remains a cornerstone in India's aerospace and defense sectors with consistent financial growth and strong market positioning. However, investors should be cautious of the current high valuation and monitor technical indicators for potential entry and exit points. Let us talk about another promising company of this sector, MTAR Technologies. It is a significant player in the defense, aerospace, nuclear, and clean energy sectors. Let's get started with an overview of the company's business. MTAR Technologies Limited was established in 1970 and has become a key supplier of complex and critical components to India's defense, nuclear, and aerospace sectors. The company operates 7 manufacturing units in Hyderabad, focusing on high-precision manufacturing and engineering. MTAR's competitive advantage lies in its strong technical expertise, robust manufacturing capabilities, and long-standing relationships with key clients like ISRO and DRDO. Now, let's take a look at MTAR's historical growth rates. Over the past 3 years, the company has achieved a compounded annual growth rate (CAGR) in sales of 33% and a profit CAGR of 7%. Over the last 5 years, the sales CAGR is 26%, while the profit CAGR stands at 8%. These figures reflect MTAR's consistent performance in expanding its business and improving profitability. MTAR has shown consistent growth in both sales and profits. The company's sales increased from 322 crores rupees in March 2022 to 580 crores rupees in March 2024. However, there was a notable dip in net profit from 104 crores rupees in March 2023 to 56 crores rupees in March 2024, highlighting the challenges faced in maintaining profitability amidst increasing expenses. Analyzing the current valuation, MTAR's stock trades at a price-to-earnings (PE) ratio of 102, significantly higher than its historical median PE of 72. This indicates that the stock is currently trading at a premium compared to its historical valuation, suggesting high investor expectations for future growth. Moving on to the technical analysis, let's examine the stock's price action. As of now, MTAR Technologies is trading at 1,862 rupees and 80 paise. Key support levels are identified at 1,684 rupees and 1,534 rupees, while resistance levels are at 2,920 rupees. The stock has shown significant volatility, with notable peaks and troughs over the past few years, reflecting investor sentiment and market conditions. In summary, MTAR Technologies Limited is a robust company with strong growth prospects and significant contributions to critical sectors in India. While its stock currently trades at a premium valuation, the company's consistent sales growth and technical expertise make it a compelling investment for those looking at long-term growth in the defense, aerospace, and clean energy sectors.